What's up, guys? Jack back again. Hey, one of the questions I get asked a lot is, okay, Jack, all right. We hit the lows. You said we would hit a certain price target and we nailed it. Oh, okay, whatever. But what is a bear market supposed to look like, smart guy? Huh? What's the bear market supposed to look like? Well, okay. Let's take a look at it and see if we can kind of build a sort of framework. Nobody's going to be able to crystal ball it exactly. We're not. But for example, are we going to go to $1,000? Well, probably not, right? So we can kind of build this kind of odds machine of, all right, what's more likely, what's less likely, that kind of thing. So let's jump into the charts and let's take a look at it. And I'm going to try to put some kind of bookends on either side of what we can expect, kind of manage expectations going into the bear market. All right, so again, this is where we left the last video off. This is what we were looking at. We were talking about how this has been our macro plan all along, run the highs, rising wedge, open interest at an all-time high right about there. Hey, waving the flag, shooting out the signal flares. This is not looking good. And now we're down in here. And the question is, what is this bear market likely to look like? So what I want to do, as usual, is go to the charts, because it's not about what Jack thinks. It's about what are the charts telling us? And are we properly reading the information from the chart? Because that's what it's all about. So one of the first things I want to point out, because I have heard through mainstream media, through popular, Twitter people, whatever, so the CT, as people call it, crypto Twitter, a lot of price targets down in the 20 or below range. 20, I am like, I could swallow. I'm not a fan of, but, and I'll explain why in a second. But a lot of people are talking about 5,000, 6,000. At some point, I think it was Michael Saylor put out a thing that said that their liquidation number where they are liquidated on all their positions is like $4,000 or $6,000. It's something way down here, right? So a lot of people take that serious. Oh, well, that means that's where the whales are going to target it. Okay, so with all that in mind, all I'm trying to say is there's a lot of fear out there, a lot of unknown. People are kind of panicking here. So let's look at the reality of the situation right now. One of the first things I want to point out is the having, right? You guys probably roll your eyes. Okay, yeah, Jack and his havings. But here's the thing I want to point out. There has never been an all-time high that has been hit in the next cycle. So here's this cycle's all-time high followed by a bear market, right? Did this bear market touch this all-time high? No, it didn't. What about that all-time high? Did did the following cycle, this being the cycle, I divided up by havings. Did this cycle right here, did the bear market here come down and touch the prior cycle's all-time high? No, we're very far, and we're on log, so it's even worse. If I turn log off and zoomed in, you'd see it was substantially different. And let's bring it to present. So we've never hit a prior cycle's all-time high. We've never done it. So now we've come down, we've hit 25,000, but 20 is the prior cycle's all-time high. So what is significant about that? Well, there's two things that stand out to me. Number one, this is 20,000, which is prior cycle's all-time high. This is where a lot of people say, quote, support is. Oh, this is where support is. Price is likely to come down and retest the all-time high, because that's just how it goes, and you're stupid if you think otherwise. Well, okay. I present to the court Exhibit A here. If we look back at the 2013 all-time high, but this bounce right here, does this really support? I mean, you can make this little argument that there's a little bit of something there, but if you zoom in, that actually didn't even hit. Do you see this? You see, we got within $500 or so of it, 300, whatever it was, but we didn't actually come down and test support. So the theory that we have to come down and quote test support, I think has been debunked a number of times through the last couple cycles. So what I want to point out too is, so number one, we don't actually need a quote technical support. Does it help if we have it? Yes. What's more important is there a level where the market feels is a fair market for Bitcoin and they're willing to defend it? They're willing to protect it. I am a believer that based on pivots, that is the S1, as well as a number of other things. But I think that this is a good one. But here's the other thing. In a bear market bottom, you need an area where everybody is loading up on shorts. This is a normal occurrence. You see this across the board. Let me delete off these. You know what happened in here? It wasn't everybody like, oh, this is the bottom. No shot. everybody was talking about, oh, we had a big move down, consolidation, and now, we're going the next leg down. This was, people understood that you have a move, you have some consolidation, you have another move. This is like a pretty standard market thing. Okay. So a lot of people were talking about this, but the thing is, this was a heavy area where shorts were just piling up. Short. And you could kind of monitor some of the on-chain, not the on-chain stuff, but the publicly available data and see how shorts and longs were stacked up. And a ton of people were short in here because, quote, oh, this is the easiest short of my life. We're going to go down to support, right? So this is another reason why I'm not a huge fan of the whole support argument. But here's the thing about where we are today. So if we remember that the prior all-time high is at 20,000. So this is how a lot of people are viewing the market right now. We were in a trade range. We broke down. The next quote support is not until 20. But hey, we're sitting here consolidating between 25 and 29. Wouldn't this be the world's easiest short? Do you understand like the mentality here? Yeah, most people are typically on the wrong side of a margin trade, just in general. So I'm trying to paint the picture here that this is primo debate, where everyone in their world is thinking, oh, I'm just going to short it, from 30,000 down to 20, easy little move there. No big deal. 30-40%, whatever that is. And then we're going to move it. And then I'll take a long and we'll go. This is an easy market. And if you look around, you're going to see a lot of analysis that shows exactly this, where they're saying, oh, this is the trade, get ready. We're consolidating. We're going to break down. But I suspect that this is debate. That this is just getting people to load up their shorts before inevitably it goes to the upside. Now, again, don't pay attention to the timing here. I'm not saying exactly in July or whatever. I think timing's a whole separate thing. I do think historically most bear markets have ended around Q3 to Q4 of the year we're in right now. So we are, in my opinion, within 6 months to 8 months of the end of the bear market. So we're close enough that number one, you need to be loading up your bags. And number two, you need to start looking for those signs of it's going to get worse, because this is another normal bear market thing where there's news events, there's people talking, etc., where they say, oh, don't do any buying. It's going to get worse. No, don't go long here. It's going to get worse. So if you look around, it's the same thing that happened up in here. Oh, why are you not buying? We're going to 100K, bro. You're not going to make it in GMI, blah, blah, blah. Where when the people actually reading the charts are like, this looks a little toppy. Like for several reasons, I think this is it's the exact same. It's the inverse. It's the same thing. So if we can get a period of consolidation with a break back into the range. So this I would expect to be between 2 and 6 months. The average has been like 4 months, something like that. So a long period of time, this is not going to be quick. But if you can outlast and not be shaken out of your bags, I think you're going to get rewarded long term. But between now and the end of the year, I think the bear market will come to a conclusion or be leading its way out. Perhaps January 1 for tax reasons, etc. Things will start popping off. But we will see. So anyway, guys, thank you for being here. Again, come check me out on twitch.tv/CryptoJack, all spelled out, no numbers. I can finally say that. And until then, we'll see you next time. Thanks, guys. I'm not trying to be perma bulljack, perma bearjack, just charts jack. Just whatever the charts are telling you, that is all I'm good for. That's all I'm here for. And nothing else. I'm not your hype man. I'm not your bear guy telling you to sell.